Welcome to The Explainer. Today, we're diving into something super important for your financial future. What's the real difference between saving and investing? And which one is actually the key to building wealth? All right, let's jump right in. Have you ever looked at your paycheck and thought, I work hard, I'm earning money, so why don't I feel like I'm getting ahead? Well, you're not alone. The truth is, earning money is just step one. The real journey to financial freedom, that starts when you make your money start working for you. And that's exactly what we're going to do in this explainer. We're going to give you a clear, simple plan to use two really powerful tools, saving and investing, to go from that feeling of financial stress to a future where you're in control, confident, and secure. So, first things first, before we can build a skyscraper, we need a solid foundation, right? Well, in your financial life, that foundation is all about saving. Think of saving as your financial shield. Seriously, it's the money you put aside in a safe spot where you can get to it easily. It's there to protect you when life throws a curveball, a surprise medical bill, your car breaking down, or losing a job. Its main job isn't to grow into a fortune, but to just be there when you need it most. Now, how do you actually do it? Well, a super simple framework like this can totally change the game for you. The 50-30-20 rule is a great place to start. After taxes, 50% of your money goes to your absolute needs, 30% can go to your wants, and that last 20%, that is non-negotiable. It goes straight into savings. And, to make hitting that 20% almost effortless, you can use a few smart tricks. Make a clear budget so you know where your money's going. Go through and cancel those subscriptions you forgot you even had. And, this is my absolute favorite, set up an automatic transfer to your savings account the day you get paid. It's so simple because you can't spend money you never see. All of this really boils down to one powerful idea: pay yourself first. Start thinking of your savings like it's the most important bill you have to pay each month. Before you pay for rent, before you buy groceries, a piece of that paycheck belongs to future you. That one little shift in mindset changes everything. Okay, so your financial shield is up. You're protected. Now it's time to go on the attack. It's time to forge your sword. And that sword, that's investing. So if saving is about keeping your money safe and sound, investing is about putting that money to work. It's about taking your cash and putting it into things, assets, that have the potential to make even more money all on their own. And the secret sauce, the magic ingredient that makes investing so incredibly powerful, is compounding. It's actually a simple idea. Your money earns a return, and then that return starts earning its own return. Over time, it creates this incredible snowball effect that can turn small, regular investments into some serious wealth. So here's the deal, right? The big trade-off. Saving is all about low risk, which means, you guessed it, low growth. Your money is safe, but it's not really doing much. Investing, on the other hand, means you take on a bit more risk, but in exchange, you get the potential for much, much higher returns. One is for security, the other is for growth. Okay, so you're ready to invest. But where? Where do you actually put your money to work? Let's take a quick tour of some of the most common playing fields. First up, we've got stocks. When you buy a stock, you're basically buying a tiny, tiny slice of a company. Think Apple or Amazon. If the company does well, the value of your little slice can go up a lot. Now, this means there's huge potential for growth, but there's also more risk because a company's fortunes can change fast. Now, if you're just starting out, mutual funds can be an amazing place to begin. Think of it like buying a pre-made basket of goodies. A single fund pulls together money from lots of people to buy a whole bunch of different stocks or other assets. It gives you instant variety, which is a great way to manage your risk without having to become a stock-picking genius overnight. Then there's real estate. This is an asset you can actually walk up to and touch: a house, an apartment building. Not only can the property itself become more valuable over time, but it can also bring in a steady income through rent. It's a classic for a reason. And what about gold? Well, for thousands of years, gold has been seen as a safe haven. When the economy gets a little shaky or prices start to rise, people often turn to gold because it tends to hold its value pretty well. It's less about explosive growth and more about protecting the wealth you already have. And finally, let's talk about the new kid on the block: crypto. These digital assets are, well, they're wild. The potential for huge returns is there, but so is the risk of losing it all. So if you're going to dip your toes in here, you have to be careful and only invest what you'd be totally okay with losing. Okay, that was a lot of options, I know. So how do you actually get started? Let's put together a super simple step-by-step plan that you can use. Okay, rule number one. Seriously, before you even think about investing a single dollar, you have to build that financial shield we talked about. Your first goal is to save up an emergency fund that can cover at least 6 months of your essential bills. This is absolutely non-negotiable. Once you've got that emergency fund locked down, your path gets a lot clearer. A really great way to start is with something called a systematic investment plan, or SIP, in a mutual fund. It just means you invest a certain amount automatically every month. Then you just have to adopt a long-term mindset. We're talking years, even decades. And as you get more comfortable, you can start to diversify and spread your money across different kinds of assets. Being successful is just as much about what you do as it is about what you don't do. So let's talk about a few classic mistakes you really want to avoid. Don't invest in stuff you don't understand. Don't put all your eggs in one basket. Don't panic and sell everything when the market dips. And please, please don't take investment advice from some random person on the internet. And at the end of the day, remember why you're doing all this. This isn't some get-rich-quick scheme. It's about planting little seeds today consistently so that one day you can enjoy the shade of a big, strong financial tree. It's about building freedom, one small step at a time. Look, we can talk about this all day, but none of it matters without action. A 1,000-mile journey starts with a single step. So after all this, my final question for you is simple. What is the one, small, totally manageable first step you are going to take tomorrow to start building your future?